Welcome to Daily Wisdom from the Flippening podcast. These episodes feature short, to-the-point clips from our full-length interviews. We talk to the men and women behind the trades, crypto exchanges, and regulations with the goal of helping you become a better, more informed investor.
Hi, I'm Mike Kaplan, editor of the Flippening podcast. Today's episode is from a 2019 conversation with CZ, co-founder and CEO of Binance, one of the world's top crypto exchanges. We discussed the built-in advantages that helped Binance launch just 12 days after their ICO and survive an early lawsuit by a major venture capital firm. For the full conversation, check out Flippening episode 52. Now, without further ado, our conversation with CZ from Binance. Enjoy.
When we started doing the ICO, we had a team of about 30 people, and most of them are tech-related developers. We had like 80% of the system already, but even that 20% is still quite a lot to cover because of the new design, a new user referral programs, new user account systems. So there's still quite a lot of work. So it wasn't like we were relaxed on the technology side. We were still scrambling. We didn't have a customer support team. So I had to borrow a customer support team from one of my friend's companies, which used to be one of our clients. They run a different type of exchange, but they were familiar with that. We also didn't have a marketing department. We used to have a sales department because we were doing B2B sales. Luckily, I got my business partner, He Yi, to lead the marketing department because she was also my partner in OKCoin back in 2014. So there's a lot of network that I've built over the years that I've leveraged for Binance. And it was still a scramble. It wasn't like we were coasting. It was always a scramble. So, but we did have those resources that other people probably did not. I don't want to offend anybody, but like say a fresh university grad may or may not have those kind of resources.
So there were some things that needed to be done on the technology side, like bolt on or at least integrate an affiliate system, integrate like some kind of ticketing system. But you weren't 30 days into this and deciding you have to like throw out the matching engine. Restarting with that, the fundamentals were down.
Right. So the matching engine was very heavily tested. So that part of it were rock solid. So there was nothing on the core technology side. It wasn't like we just decided to build something new and we had to start from absolute scratch. You can't do that with an exchange. And if you do that, then you would release your system a year later instead of 12 days later. We launched Binance.com 12 days after the ICO, which helped with the reducing the anxiety or the waiting period for our investors.
You mentioned luck, but it sounds like perhaps the luck was that you had been preparing for, the genesis of Binance for a long time and kind of history collided with your interests and, the foundation of a new financial system all in one point,
I think in order to be lucky, you have to be prepared. Even if you're very prepared, you still need luck. So we were very lucky with our market timing. So the Bitcoin price started going up around March 2017. So ideally, if we started in March, it would be better. If we started 3 months earlier. But, 3 months later wasn't too late. So we were very lucky with the timing.
One of the most badass things that I've ever heard about Binance, there's some really cool user growth stats and all kinds of numbers that can blow people away. But I recall seeing a story about Sequoia suing you guys over the no shop clause in like a term sheet. So like my understanding is when VCs hand out term sheets, there's like there's a no shop clause and there's like a confidentiality clause. And I have never heard of a VC ever trying to enforce either of those. Like it just wouldn't benefit them. They wouldn't seem like very pro-founder. And if you sue someone over one of these, you're never going to receive an investment from them in the first place. So it seemed like absolutely absurd. Is that story true?
Yeah, that story is accurate. So what happened is when they made the proposal for the term sheet, we explicitly asked to remove the exclusivity clauses. Once the term sheet was agreed on, they made us, basically they were making a bridge loan to kind of seal the deal. In the bridge loan, there was another agreement which there has an exclusivity clause, which we missed. So they sneakily put that clause in. So we started talking to Sequoia around August. So the full transcript of this story is like online actually now. So it's like 150 pages. So we started talking to them in August 2017. September, China issued a ban on crypto exchanges and they got cold feet. And we continued on, moved out of China, etc. By December, we became the #1 cryptocurrency exchange. And our growth was so quick. They still want to invest at the original valuation. We were like, no, that's not how it works anymore. We had a very brief kind of back and forth negotiation and they just went to court. And then we were asking ourselves, what happens if they win? If they win, then what they will get is we will come back to the negotiation table to negotiate the deal again.
And in that time, more time has elapsed and you guys have grown more and the valuation has gone up. So like there's no win for them here. It didn't seem like there was.
We probably went up in value 10 or 20 times already, right? So, and they want to invest at the original valuation and preventing us from talking with any other investor, which hurts us badly. Neither side wants to back down, so we went to court and we won everything. What's interesting is Sequoia paid $2.4 million on their own for the legal fees. I had to pay about $800,000 myself to front the legal fees. And then my $800,000 was eventually covered by Sequoia because they lost. So Sequoia paid about $3.2 million of legal fees and won nothing.
I've never heard of them doing that before. Like, do you know if they've ever done that in the history of Sequoia? Is that the very first time that they've attempted these kinds of shenanigans?
I really have no idea, but I would imagine we're probably the first ones that fought back this hard because we're kind of I'm kind of stubborn in that way. I'm kind of mission driven. Even though it hurted our ability to raise more money for the duration of that lawsuit, which took about a year. But luckily, Binance survived regardless of that, which is very lucky. But I think most entrepreneurs, 99.9% of the case, they will just cave in. They'll just say, okay, no, we'll cave in. We'll come back and talk again. We'll probably take some investment at a lower valuation just to remove the lawsuit because no startup can handle like a year and a half without investments from VC investors.
That's it for today. If you like what you heard and want to support the show, please consider leaving us a review on iTunes, Stitcher, or wherever you listen to podcasts. If you decide to leave us a review after subscribing, we'll send you a free Nomics t-shirt. Just hit us up on Twitter at username Nomics Finance after you've left the review and we'll hook you up. You may also be interested in Nomics.com, our crypto market cap and pricing website. Check us out at Nomics.com, spelled Nomics. Now stick around for our legal disclaimer. All opinions expressed by podcast hosts or guests are solely their own opinion and do not reflect the opinion of Nomics or any other company. This podcast is for informational and entertainment purposes only and should not be relied upon as the basis for investment decisions. The producers, hosts, and guests of the show may maintain positions in the companies or assets discussed today.